Welcome back. Today for our session on knowing your insurer and your policy, we have two senior technical members of the Commission, both from our Insurance Supervision Unit. Mr. Kencil McPhee is a Deputy Manager within the Supervision Unit, responsible for the supervisory oversight of both life and general insurance companies, licensed as a domestic or external insurer. He is a knowledgeable and experienced insurance industry professional, having worked some years both in regulation and as a former industry representative. Mr. Darrin Rodgers, a senior analyst within the Supervision Unit, is an established financial services professional, having worked both in banking and insurance regulation, which provides him with a broad perspective on two of the key pillars of the financial services sector. Darrin is responsible for a portfolio of insurance companies that are registered and licensed as a domestic insurer and an external insurer, respectively. Both gentlemen bring with them an invaluable level of experience to this topic. Welcome, and thank you for participating in this discussion. To start our session, let us start with the question that we as consumers are sometimes challenged in seeing the value of, and that is, what is the purpose of insurance? And I'd like Kencil to start that question off for us.
Well, thank you, Carl. Well, first of all, what I want persons to understand is that insurance is a way of managing risk. And the primary purpose of insurance is to reduce financial uncertainty and to make accidental loss more manageable. So when individuals purchase insurance, what they're really doing is transferring the cost of their potential loss to the insurance company in exchange for a fee. And this is known as the premium. Now, some of the more familiar reasons why persons purchase insurance would be to help pay for medical emergencies, illnesses, or future medical care. Also, to guard against financial loss from the death of one of the breadwinners within the family. A person may also just want to simply, get assistance with building wealth and savings for the future. Another very popular reason, and I'm sure you will hear a lot more of it later today, is to protect your home against hurricanes and other unforeseen losses such as fire and flood. And last but by no means least, with insurance, it's a requirement actually by law to have motor insurance when operating a motor vehicle.
All right, so you named several instances and scenarios of why persons would need insurance. What type of insurance policies are offered by insurance companies?
Well, in the Bahamas, insurance is divided into two distinct sectors. So we have the property and casualty sector, which is also referred to as the general insurance sector. Also, there's the life and health sector, or commonly referred to as the long-term insurance sector. So under the general insurance sector, we have insurance policies which deal with stuff like liability insurance, marine and aviation, motor vehicle insurance, and property insurance. For the long-term sector, this would cover policies dealing with all life insurance policies, sickness and health policies, and that would include individual plans as well as group major medical plans. And we also have some companies offering annuities.
All right, so, Darrin, in the Bahamas, we oftentimes refer to an intermediary as my insurance company. However, this is not fully accurate. What is the difference between an insurance company and an insurance intermediary?
Thank you, Carl. That's a very important question. And so I'll say this. The Insurance Act prohibits the direct selling of insurance products in the Bahamas. As such, they must be bought or sold through an intermediary. Hence, the Bahamas is considered to be an intermediaries market. Now, you would want to know who you're purchasing your insurance from, who you would have a contract with. So let me just break it down for you. The insurer, or your insurance company, is the entity that holds the actual risk of the item being covered or insured, be it a person or a thing. The intermediary is responsible for facilitating the placement of that insurance business through salespersons, insurance agents, or brokers.
Okay. So you're saying I cannot purchase a policy directly from the insurer?
The short answer to that is no. Okay. Now, for life and health or long-term insurance, you can purchase through salespersons that are attached to or sponsored by the insurance company. For general property and casualty, you can purchase from an agent or a broker. Let me also state that the intermediaries can possibly be contracted by the insurance companies to carry out other duties besides sales.
Okay. All right, thank you. Kencil, We hear about the insurer, we hear about the intermediary, but how can I be certain that my insurer, who holds this risk, is reputable and in good standing?
Well, that's a good question, Carl. Now, the Commission, through its mandate, is responsible for all insurance activities within the Bahamas. And at the Commission, one of our primary duties is to ensure that all our licensees remain in good standing and are compliant with the legislation and all regulatory and supervisory requirements. And this is really done as part of our annual license requirement, which all our insurers have to undergo. And what we've actually done at the Commission for all consumers, we actually have placed on our website a list of all licensed insurers, and persons are able to view that at any time at www.icb.gov.bs.
All right, so you mentioned the Commission and its role in what we do. What does the Commission do to make certain that an insurer will have money to pay my claim when it comes due?
Well, now to ensure that our licensees are able to pay claims, the Commission has adopted a risk-based supervisory framework. And what this framework does is that it allows us to assess whether our licensees have sufficient earnings, capital, and liquidity to pay claims when they come due. Also to deal with any unexpected shocks that they may uncover. Now, as part of the process, we review financials for our licensees on both an annual and quarterly basis. And regarding the capital, we've actually introduced risk-based capital for our long-term insurers, and this was done at the end of 2018. And we're currently in the process of introducing risk-based capital for the general insurers. However, it doesn't just stop there at the capital level. What we do at the Commission, we also assess the corporate governance structures for our licensees. So in addition to that, we ensure that they have prudent and sound board members and senior management in place. And all of this is really facilitated through off-site and on-site work, which is carried out by the Commission staff.
All right, that sounds very comprehensive in terms of what the Commission does and how we fulfill that role. Switching gears from understanding the intermediary and the insurer, we can discuss the actual thing that binds one another in terms of that insurance policy. Which is the actual thing that establishes some contractual obligation? What are some things a prospective buyer must consider before purchasing an insurance policy?
Well, Carl, in that regard, the first thing I wish to highlight is one must know what insurance is. And so to further what Kencil would have already stated, it's important to understand the purpose of insurance, and that is to indemnify from a loss. And so we want to understand that it's not to put you at a profit or to put you in an advantage. However, when a loss occurs, the purpose is to put you or restore you to the position you were in prior to the loss. So once we understand that, then we start to look at the risk involved. You look at the item. For example, if you have a vehicle worth $50,000, it would not make sense to insure it for $15,000 because you will not be able to be made whole after a loss would have been incurred. Likewise, if you, for example, are the sole breadwinner of your household, to take out a $10,000 policy really only allows you perhaps to have a decent burial, a decent funeral. Yeah. And so you would want to look at the value you bring to your household and try to look at that type of income so that you can assess and determine the level of policy coverage you would wish to have. Yeah. And then you would want to consider the various insurance products out there. And it does not hurt to ask questions. What is it that you have available? As opposed to, I just need $30,000 worth of insurance. Yeah. What are the products? Is it one that has a savings attachment or some kind of investment feature? So it is important to understand the product, understand the risk, and importantly, the whole purpose of the insurance.
All right, and putting that all together in terms of the risk, the purpose, and understanding, there are some key features, I imagine, of an insurance policy, whether life or general, that a prospective policyholder should be made aware of. And I don't know if you can outline some of those things on behalf of probably either the general or the long-term insurer.
Yeah, okay. So there are several key features. I'll start, for example, with the cover note. The cover note is a temporary document that outlines the very specifics of that particular policy. For example, the name insured, the insurer, the coverage period, the amount, premium amount, or the value of the thing insured. You have, for example, also exclusions. And so let's say, for example, you purchase a policy that has comprehensive coverage. There will still be certain items that that contract does not cover. And so the exclusions would list out what it is that's not going to be covered by that particular policy.
Yeah.
Kencil, you want to touch on a few of them
Yeah.
for us as well?
Sure, I'll speak to a few. So one of the key features persons should know is the policy limit. And what the policy limit is that it's the maximum amount of money that the insurance company will pay towards a covered claim. And when we talk about the policy limit, this may be done in terms of what we call a per occurrence basis. And this really says the maximum amount of funds that the insurance company will pay towards a specific event or incident. Policy limits may also be done on an aggregate basis. And this actually states the maximum amount that the policy will pay for all claims during a particular period. Another important key feature would be the deductible. And with the deductible, this is the amount that the policyholder is actually responsible for paying prior to the insurance coverage actually kicking in and the insurance company starting to pay. And these insurance deductibles, they're most commonly seen in property and casualty and health insurance. Now, the way they express the deductible sometimes is that it's either expressed as a dollar amount, so that would be the case in the major medical plans, or they can be expressed as a percentage of the insured value, and we typically see that in homeowners and property insurance.
Okay. All right, so Darrin, in order for the insurance company to know information about me, what should I give them in terms of being considered full disclosure? How am I considered to give all of the information, and now they say they have everything on me in order to assess my risk?
Okay, Carl, so now we're getting into the real meat of it from the consumer's perspective. So the first thing I would advise anyone to do when purchasing or setting out to purchase insurance, when you're talking about the application process, etc., is to answer all questions truthfully. I cannot state firmly or clearly enough to hit home how important that is. When you're reviewing the application, whether or not someone is filling it out on your behalf or you're doing it yourself, your signature attached to the bottom of that or at the end of that application confirms that you have read and accept everything that is stated there. So if someone does it on your behalf, you must read over that application to ensure that the information is correct and true. If you do it yourself, there's no slippage, no, I'll just put this just in case. Answer with the absolute truth. You want to avoid issues such as possible misrepresentation being considered when it's time for a claim. And misrepresentation is really just when you state information that is not true, can be proven to be untrue, that will affect whether or not the policy should have been issued in the first place or how the policy should have been issued initially. You want to avoid that. You also want to avoid, let's say in the general or the P&C section, you want to avoid things like condition of average problems, where you may find yourself underinsured. You know your home, the building being valued at, let's say, $200,000, you take out a $100,000 policy. Well, that's half. So that's what they're going to start from. And then you have to take the deductible from that. So you're already putting yourself at a major disadvantage just because you were not true and you were not upfront and honest about the information. But you also want to look at other aspects such as KYC documents. The insurer needs to know who you are. You could be taking out some fraudulent policy that you may not even be eligible to get coverage on. You got to know what the details are of the person purchasing. Yeah. So you'd want to do things like provide your proof of identification. Usually 2 government-issued photo ID. Yeah. It's very simple. You want to look at proof of address. We need to know how to find you. You need to look at your proof of income. Let's make sure that you're not putting into some proceeds of crime, okay? And for corporate entities, you want to look at a business license, a valid business license.
Yeah. All right, so I know we talked about general insurance, but Kencil, are all life insurance policies the same? Are there different types to choose from?
Well, definitely. It's important for all persons to know that all life insurance policies are not the same. Now, despite how many options you may have, life insurance policies, they all can be broken down essentially into 2 main categories, and that's term and permanent. So under term insurance, just like the name implies, the insured basically receives coverage for a defined length of time, say about 10, 15, or 20 years, maybe even 30 years. It may be also where you have the term policy to a predetermined age. So that would be like a term to age 60 or a term to age 65 plan. Some companies may even offer a term to age 100. Now, with the term insurance, if the insurer dies during the term of the policy, whilst the policy is in force, then the death benefit will be paid to the beneficiary. Now, once the term has passed, the insured no longer has any insurance, so they would either need to get a new policy or go without. For the permanent insurance, on the other side, and this would be more like the whole lives and the universal life plans. And what these plans do, they provide lifelong coverage. And what's unique about these plans is that in addition to the death benefit, they tend to have a cash value component also attached to them.
Okay. All right. So, Darrin, what options are available to a policyholder whose insurer refuses, whether rightly or without explanation, to honor an insurance contract? You know, Kencil brought up the element of term, and if the term expires, you're no longer covered. But let's say you are within that particular period and the insurer doesn't honor that contract. What options are available to a policyholder?
Okay, so in a case where you're not satisfied and you would have read and reviewed your policy contract, and you feel that the contract is not being properly honored the way that you expected or you understand it to be, please note that each insurer should have an internal complaints process. So the advice I would give is to seek out the relevant persons in that company that deals with the complaints. You want to express and state whatever your case is, and at the end of it, we're hoping that you would be satisfied. However, that doesn't always work out. You should get from the insurance company, that complaints process, you should get something in writing that states what the company's position is. Now, this is different from your letter that you would have gotten to say, deny the claim or make an offer that you're not satisfied with. This is the company saying that we have reviewed our previous decision and this is our position at the end of it all. That's called a final position letter. Once you have that letter in hand, you can begin the process of appealing to the Insurance Commission for assistance. We have an internal complaints process at the Insurance Commission, but we would first want that final position letter. That forms a part of what it is we would need to review. Helps us to get the understanding we need to know how to approach the situation. Once we have that, there are several other items that we require from you, and that would be any relevant documentation that forms a part of this contract, the contract itself, any details or information that can be provided to support your claim. Once you would have submitted that to us, we would then take a look. We'd do an internal review process. We do have a internal complaints committee. We meet often, monthly actually, and we would then review all of that, come to a decision, and we'll go from there. Now, should you not be satisfied with our review and the outcome of that review, then of course you can seek legal redress through our court system.
Okay. All right, so we've learned about who my insurer is, who my insurer really is, and who an intermediary is. We've learned about what type of consideration should be made as a prospective buyer of insurance. And we've also understood, we got an understanding of the different types of insurance policies. Is there anything else that you feel like our virtual audience needs to be reminded of as we are not only in this hurricane season, but as we learn more about the Bahamian insurance industry?
My final words would simply be just a reiteration of what I've said earlier. Understand and know your policy. It's a contract. You have the right to know what the contract is all about. Please read your contract. Ask questions. I would also say, again, prior to all of that, when you do your application, ensure that the information provided is true and correct. Trust me, it makes a big difference at the time of a claim. So once you provide true and correct information at the point of application, once you would have reviewed your contract and asked any questions that you're not clear about, I would say to you, continue to pay your premiums and hope for the best.
Yeah. And Kencil, any final words on what else our audience should be aware of?
Sure, thank you. Now, what I would like to leave with persons is that purchasing insurance is a very major decision. In fact, it may be one of the most important decisions you make in your lifetime. And with that being said, you should treat it as such. So you want to be an informed consumer, and you want to make sure to do the necessary research and fully understand what you are purchasing. Also, I would like to advise persons that the Insurance Commission is here, and we're actively working to ensure that your insurance interests are protected.
All right. Well, I thank you both, gentlemen. But of course, our session is not over. We will now entertain questions coming in from the live chat, and I'm sure you're both qualified to answer any of the questions that arise from our live chat and our virtual audience.
Thank you.
Thank you.